Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, March the 23rd, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place. We do not know what the market's going to do. We basically look at what it could do and then have a plan for each of those scenarios. Then we wait for the market to show us what it's doing, and we have a plan in place to execute on. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything here live in the go-to, and then we do live trading and analysis during the course of the RTH trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, quickly take a look at the news. We did have news out this morning. At 8:30, we had unemployment claims. They came out higher than expected. Expected 240, came out at 258. Really didn't move the market. Moved gold a bit. Currently, right now, we have Fed Chair Yellen speaking, but apparently she's not supposed to be mentioning anything about the economy or rate or anything. Yeah, right. Whatever she says is going to still cause the market some jitteriness. Is that a word, jitteriness? 10 o'clock, we've got new home sales. 10:30, we got natural gas. And then 12:30, we've got Kashkari, Fed members speaking. And that's about it for the news tonight. We've got Kaplan speaking later in the evening. So that's it for today. And then tomorrow, end of the week, we have Canadian CPI, common CPI, median CPI, trimmed CPI, core CPI, a lot of CPIs, of course U.S. core durable goods and durable goods orders, and then flash manufacturing and flash services PMI. I'm surprised that we're not seeing University of Michigan on Friday, and I got to figure out why, but usually we get that report as well. Anyway, taking a look at yesterday. Yesterday, our main hypothesis was a open auction in range, a move up, and then getting possible continuation as our main hypo. But we talked about the hypo 2 being equal opportunity and hypo 2 being a rotational day between 57 and 52 as we balance out the auction after the big trend day. And that's exactly what we got yesterday. It was actually not a bad trading day. We got some nice moves. We had a nice, beautiful Mr. Sneaky off of that 48 level. That gave us a 10-point rotation. And then what do we see? A FUBAR Mr. Sneaky for another 8.25 point rotation up. So pretty decent trading yesterday on the ES. Each day I like to start my day with a simple candlestick chart, and I'm looking at a 9 EMA, 20 SMA on all the time frames. I'm looking at slope and separation of the two moving averages for strength of trend, where the trend is being challenged or violated. Monthly, beautiful move on the monthly over multiple years. Strong trend then at the end of 15, beginning of 16. They test it, then they take it back. And then in the 2017, we've been trending strong, and we have what could be the possible, first bearish month of the year. We've got a week and 2 days left in trading. Our month open is 23.6075. We're trading just below that right now at 23.44. And keep an eye on the open of the month to see whether or not we get back above it, and whether or not we get into a situation where we kick into critical mass, and we'll talk about that a little bit later as we get closer to the end of the month. On the weekly, we had one time framing up, and then we had the one time framing 2 weeks ago was violated with that move down to 54. Basically chopped last week, and then this week we came down and closed the technical gap, tested the 9 EMA. We still are in the trend, but we are challenging the trend. We're losing a little bit of slope, a little bit of separation, but just as easily we could bounce from here. But the week open is 23.73.75, and we could in the next day and a half, kick into critical mass, and we'll talk about where that is when we get into setting up our charts for the day. On the daily, you can see that we've rolled over and we are getting a downward, start of a downward trend. Got a bit of a technical gap. Close of the gap will be up at the 23.58 area, but the trend is down on the daily. On the 4 hour, we had a nice strong trend down over the Globex yesterday and the trend day on Tuesday. And basically yesterday they started coming up to fill the technical gap. They filled the technical gap, and now we're getting some rejection and possible continuation of the downward trend on the 4 hour. On the 1 hour, more consolidation more than anything. So just going sideways on the 1 hour. On the 30-minute, again, consolidations, but below the 9 and the 20. And then going to the 15-minute, we had broken back down, got a possible foobar Mr. Sneaky here on the 15-minute. Hasn't set up yet, but if we do get the inside bar, we could see a move back up into the 46, 47 area and right in the middle into that gap zone again. And then on the 5-minute, you can see that we've broken down pretty strong on the news and on whatever Yellen is speaking. I hate the fact that I'm doing this while she's speaking. I still have my long on gold, though, just a single runner left. Taking a look at the, I'm trying to do this very quickly, gang. So just taking a look at the big picture structure. We had this balance here with the microcomposite VPOC at the 2359, 2360 area. Tuesday took it, it broke us out of balance. We've come down, tested that 38 1/4 VPOC where we accepted price just before the gap up, and then since then we've just been chopping around in between this 49 and this 33, and we've got a double distribution in this area between the 45 and the 39, and we're basically filling in the auction down here and getting some maturity and determining what is fair value, 45 or 39. Currently, the 2 days microcomposite is still sitting at the 23.40.50, where we stole the VPOC into the close on Tuesday, and basically where we chopped around yesterday. Key areas to keep an eye on is if we get above the 49, we have to look at the 50% retracement to the significant breakout candle. So the high on that was 78.75. The low on that candle was 38. And so the 50% of the significant breakout candle is going to take us right back into that 59 area and back into balance around the microcomposite VPOC in that balance zone that went from the 21st through to the 20th before we had the breakout candle on Tuesday. And then below us, watch the 33 1/4, 32 area. If we break the low from yesterday in Globex, which was down in the 32s, look for them to come down and hit this 26 and test the lower side of this balance, but I would really be looking at a possibility of a move down into the 19 area. Taking a look at the overnight inventory has been basically net long all night, although we are breaking down and putting a new low in right now overnight. And but the inventory is mainly net positive overnight. So there could be some longs that get caught in the hole here if we break down and don't hold that 38 area from the other low from the day. So taking a look at our levels right now, currently. Again, we've been doing this so often where we're coming into the RTH session challenging a low or high, so we could put in another new low, but the overnight high is pretty safe right now, so we'll put the overnight high in at the 49.50. Our VPOC is not likely to shift. It's at 47, sitting right at the value area high from yesterday. And currently right now, and it could change, our low is 41. And we've got a little bit of an LVN here at the 43.25. I'm going to mark that as an area, because above that, I'm looking for a move back up into yesterday's VPOC at 45. And that's all the information that I need from overnight. So our daily ATR is running at, our full session 20 period daily ATR is running at 1636. So off of the low overnight, our upside daily ATR target is 57.50. Also happens to be our key line in the sand. That's going to change anyway, so we'll take that out. And off of the high overnight, 49.25. Our downside daily ATR is down at 32.75. So basically right at yesterday's low. Our weekly ATR has not changed to the downside. Our weekly high is 78.75. Our 20 period weekly is running at 40.80, and we have tested it and broken it yesterday. We're back above it, so keep an eye on the weekly ATR downside target, because if we get below it, we could see some capitulation. Our 2-day daily ATR, based on today's current daily ATR, is 32.72, so 32.75 points. Our week open is at 73.75. So our critical mass right now for the week is sitting right at 41, our overnight low. I don't want to change that. I can do it this way. So our overnight low and weekly critical mass. What is critical mass? For those that are not new, is that once we determine that we cannot get back above the open of the week, or there's a low probability because you're beyond the number of days left of the average true range, a lot of times you'll see capitulation from one side and the other side will take over. In this circumstance, if we get below 41 and hold below 41, the buyers could capitulate, the sellers accelerate into the end of the week, and we get a bigger move down towards the 19 and 09 level. So that's why I watch critical mass. And then next week, as we come into the end of the month, it'll be bigger because we're watching the critical mass there. So just a couple levels I'm going to be watching. I'm going to be watching the 47, targeting the overnight high, and the 51. Obviously, the half back of the significant breakout candle is 59. So we're going to be watching that, and that's just below that. The VPOC has actually shifted slightly down to 59.75, and then the 59 is the 50% of the significant breakout candle. And To the low side, I'm going to be watching the 39 value area for move to test the 38, and then below the 38, I'm going to be targeting the 35.50, and then of course below the daily ATR, we're going to be targeting the 26 area, and then the 19. Okay, so that's everything, all the levels we need. So what's the hypothesis today? We're going to be opening inside a range, inside a balance. I think that there's a possibility that we don't have a lot of news today, so there's a possibility that we get another balancing day. We had a neutral day yesterday. A lot of times, a high amount of time, you'll see a neutral day followed by a neutral day. But our overall direction is down. We've broken the one-time framing, so we've got to put a downside bias. So I'm looking for an open auction in range, in value, a move up to take out the naked VPOC and possibly push up into the upper value and maybe a false breakout. But then I'm looking for responsive sellers to step in and rotate us down through value, chop around between the 38 and the 39, and then push down through to the 32 and possibly get a late day probe down to 26. And basically I'm looking for a smaller range day with a downside bias, but rotational. My secondary hypothesis is an open auction in range. Move down early, down towards the 34, 32 area, find responsive buyers, and then rotate us up through range and value and come up towards the 59 area and back towards balance and back towards the 50% of the significant breakout candle. And our range capabilities give us that possibility. Hypo 3 is an open auction in range, failed to break out, a strong move down to the 32 area, and then fail through the daily ATR and get a continuation trend day down towards the 19, possibly down into the 09. And that's hypo 3. And then hypo 4 is the opposite, an open auction in range, open test drive, come down, test the 39, find responsive buyers, rotate us up through, break out of the range high, chop around the 49.50 area, then get continuation up into the 59. Whoops. What was our daily? Sorry. 41 plus 16, 36, 57.50. And then get a push through up into the 63 to 67 area. I think that's a low probability. I think if we do make a move up, we're going to stall around the 59, 60 area. So those are my main hypotheses for the ES. There was a beautiful setup this morning on gold. I took the trade, and it was a nice cup and handle. I posted it in the room. There's the cup. Comes down, validates between the 38.2 and 61 for the handle, goes sideways, then we pop, we hit the main primary target up at the 50-60 area, fall back slightly, hold the 38, and then push up on the news to the 100% target. And since then, we've had continuation up into the 53. If you take a look at where we are in gold, you see that we're balancing here around the 50 area. If we can get above this 53, I'm looking for a push up into where we tried to hold value on the last fractal high from 64.90, and that's up at the 57.90. And if the healthcare bill gets passed today, I would even think that we have a possibility to see the 1270s. And we've got not much above in that area. We've basically came down right through this area. The next big target above the 57 is right here at 62.60, and then up at, I don't know where my profile is gone, up up here where they're trying to hold value. Oh, come on. Come on. Right at the 1309 area. So that brings us into the 1300s. But right now, I think we're going to see some balance around this 51 and possibly a push up into the 57. But if we fail to hold the 53, where you have to watch to the downside is this 42, below 42, target the 39 and 37 area, back to this even back to this possible 34. 35 area. So that's what I'm looking at on gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.